Folks, small caps. We got to talk about small caps. They haven't been in these valuations in comparison to large caps in years. Now, there's something on the horizon, something really big that you need to know about, and you can take advantage of it right now if you're following small caps. That's what we're going to talk about in today's video. First thing first, how do you create a natural hedge in your trading? By listening to me and Rob Booker, of course. How else? We joined forces to create a new system. Everyone's talking about it. You've never seen anything like it? Click the button at the bottom of this page to find out exactly what's happening. Now, let's talk about small caps. All right, folks, I got something really big for you right now. I don't know if you've been following small caps, but if you haven't, they are much more sensitive than large caps. Let me explain to you why. Think of a typical S&P 500 stock, okay? I'm going to give you the same example that I use in my lab. Johnson & Johnson, big company. How many products do you think Johnson & Johnson has? Maybe 100, maybe 200. Let's say tomorrow news comes out and says Johnson & Johnson baby shampoo has been found to cause, germs, something. I'm making this up. And it's no longer produced. Well, Johnson & Johnson has 99 or 100 other products like it. It's not a big deal. They're a conglomerate. They're diversified. So China and tariff war isn't impacting Johnson & Johnson or other large cap companies. I'm using Johnson & Johnson because everyone's familiar with Johnson & Johnson, right? I mean, we all use baby shampoo made by Johnson & Johnson for our kids. So the bottom line is, the smaller the company, the less products or services it produces, the less diversified it is. Smaller company, less diversification. And guess what's been hit by China more than anything? Smaller companies, because they're one-trick ponies. They don't have a lot of services. They don't have a lot of different products. So if they have something that's being impacted by China, that's their whole business. But where am I going with this? Here's the thing. There's news right now that China and US are about to work things out. Now, the good part is it doesn't matter if they do work things out or not. It's how the market perceives it. And right now is the best time to buy small caps because they are at support levels. Now, as I'm talking about this, I'm going to throw a chart on this screen so you can see what I'm talking about, and I'll mark the lines. Look at the chart right now. Notice for the last year, except for that little downside we've been seeing the same support and resistance levels on the Russell 2000. The Russell 2000 tracks stocks that have a market capitalization of less than $2 billion. So when I say small caps, I'm not talking about over-the-counter stocks. I'm not talking about penny stocks. I'm not talking about companies on the brink of extinction. I'm talking about stocks like Amazon 20 years ago, Netflix 10 years ago, when they were just ready to go prime time, but before they were so big that everybody knew what the company was about. So these are developed companies, big companies, and based on what I'm seeing on the chart pattern, we're about to do one of two things. We're about to go back up to the top of the channel and possibly go back down, or we're going to go to the top of the channel and we're going to break out higher, okay? You're seeing this chart as I'm speaking. It should all make sense to you. So either way, the reason I'm talking about small caps right now is we're literally sitting at a low risk long-term support level. And right now is an amazing opportunity to start buying small caps because your risk to reward level is really low. In other words, your risk, if it breaks support, you're out. If it goes higher, you stay in. But even if it remains in a sideways channel, you're still protected because we're at support. So even if it goes just up to the resistance level, you could still make money, you can get out. Or if it breaks resistance and goes higher, guess what? You'll catch the first post-tariff war breakout, which will be huge. Now, something else I want to tell you about small caps. The smaller the stock, the more sensitivity it has to the economy. If you look at the Russell 2000, it peaked almost a year ago, while the S&P made new highs just about a month and a half ago. So small caps will make lows much quicker or highs much faster, and they'll revolve much faster in the direction of the trend before the large caps do. What does that mean? I know I'm speaking, trading jargon. What it means is this: small caps show their hand much faster than large caps. So if the tariff war is being worked out, small caps will start rallying and blue chips will start following. Here's a summary. In a bull market, small caps will rise much faster, and in a bear market, small caps will fall much faster. So small caps, because they have more speculation, the more speculation the stocks have, the quicker they'll react to the market. So again, keep your eye out on the Russell 2000 and other small caps. When I'm talking about small caps, I'm not talking about penny stocks, over-the-counter stocks, or anything like that. And 3, we're at major support level right now, and we're going to do either of 2 things. We're either going to go to resistance or we're going to break resistance. But right now, you've got low-risk entry opportunities into small caps. Remember, if you haven't caught wind of my news with Rob Booker, then click below now to find out how we're using nearly 40 years of experience for something that's proven to produce big trades while keeping your portfolio safe. Or you can keep trading the same old way, where you make $10 and you lose $20. Raise your standards. Tap the button below now.